Hey everyone, so welcome back to the channel where we explore the world of ASX stocks, real estate, and just good investing in general. So as we get closer and closer to Christmas, most people will be spending a fortune on clothes and gadgets and random things that they will never need. But if you're anything like me, you'll be thinking about what stocks to buy over the holiday period, which really made me smile when I saw this meme because it's exactly like me. Anyway, so I've done a fair bit of digging around and come up with 3 ASX stocks that I think will do extremely well during this Christmas period.
So, during the holidays, there will be a lot of presents and gift giving to people who don't really know what they want. So we normally give them gift cards, right? And the company that owns the services behind the gift cards is EML Payments. Now, EML Payments is a company that helps businesses to make payments both supplier-facing and customer-facing. They have 3 business segments: gifts and incentives, which are the gift cards themselves; general purpose reloadable, which are the cards that have money loaded on and spent, and you can do that over and over again, which is used mostly in gambling cards and salary packaging, and most recently, virtual Opal cards, which we'll talk about a bit later. And the last segment is virtual account numbers, which are like virtual credit cards in more commercial transactions. Now, gifts and incentive segment is the one that retail consumers will use during the holidays, and historically, it always spikes during the second quarter of the financial year, which is the Christmas period. But I think this year it will see a huge spike in retail gift card use because all that overseas holiday money is pent up pretty badly, and I think retail will get a huge boost because of it while we are still in lockdown. And if earnings are up when they report earnings in February, then the share price, which generally has a strong correlation to earnings growth, should also go up. Surprisingly, gift cards only make up a small portion of their earnings because it's the general purpose reloadables and the virtual account numbers which are the big earners in the company. Now, the virtual account numbers earnings has been pretty steady, but the general purpose reloadables has more than tripled last year's numbers, and I'm thinking it will continue to grow, especially with New South Wales Health using their salary packaging for the huge workforce, and the gamblers using it to load money for bets and get payouts when they win. And especially when the virtual Opal card gets rolled out in partnership with MasterCard. If you don't know what an Opal card is, it's the New South Wales transport card that lets you load money on and then use it to tap on and off for trains, buses and ferries, similar to the MyKey in Victoria. The other thing to note is that the government has been looking to overhaul pokie machine industry recently to also use a reloadable card, and I'm thinking EML is the perfect company to take advantage of this. EML's price still hasn't recovered to their February prices, so it's a great stock to have during the Christmas period, especially considering they were at $5 even before a massive overseas acquisition of PFS, which is another payments company based in Ireland, was bought at a reduced price. And now, as the largest fintech payments company, they are still under $4 a share, which is a great value. I'll definitely be picking up more every time the share price dips.
The second stock on the list to buy is ticker SUL, or Super Retail Group, and they are going to be another beneficiary of these holidays because of all these border closures. They are the owner of Supercheap Auto, Rebel Sports, BCF, and Macpac, which, if you notice, are all the retail places that you'll go to prepare for a regional trip in lieu of an international one. You'd go to Supercheap Auto to buy parts and repairs for that road trip, Rebel Sport for that weekend sports game, BCF for everything you need for boating, camping and fishing, and Macpac for everything else.
Looking at their financials, they've had strong revenue growth for the past 10 years and has a very healthy balance sheet. They are taking a leaf out of Kogan's book this year to focus on its online offerings in 2020, which is going to be a huge winner. And so far this year, they're already up 25% in sales, even though all the Melbourne stores had to close. The only thing stopping me from investing is the share price, which has grown a little too high for my liking, but I'll still be keeping an eye on it when it dips for a chance to take a position in it. On top of all of that, unlike EML, they are a decent dividend share paying about 3.5% dividend with a 96% dividend stability and 100% franking, so it might be worth it just to hold it for that reason alone.
The final stock to look out for is Australia's biggest supermarket, by a slight margin, and that's Woolworths. Now I know Woolworths is a safe blue chip stock ranked high up on the market cap, but it's always good to buy a defensive stock like Woolworths during this volatile time. And with all the money that's not spent on overseas travel this year, I believe there's going to be a lot more entertaining at home. So that means this Christmas will probably give Woolworths their highest ever earnings quarter. Actually, I think Woolworths, Coles and Metcash are all going to get a big boost in sales this year. But I do feel like Woolworths has come out on top with their little Ushies promotion over Coles' little treehouse book thing that no one ever wanted. And if you remember, all these Ushies were out of stock really quickly because of all the people changing over to spend the $30 to get those Ushies. On top of the supermarket business, Woolworths pretty much has the liquor market nailed down as well with their Dan Murphy's, BWS, and Cellar Masters.
Remember during the panic buying phase that liquor was another target after the toilet paper fiasco, so it's definitely something that isn't going to be cut out of the everyday budget, regardless of what health crisis is happening. With $1 billion in cash and net profiting $1 billion every year, Woolworths isn't going anywhere in our lifetimes. No, I can't say the same about Big W though, but at least they're closing the non-profitable ones soon.
So there you have it, the 3 stocks to look out for this Christmas. We are focusing on gift cards, retail for regional holidays, and consumer staples. Now of the 3 stocks that I just mentioned, EML is probably the most interesting and the one that I'm going to be looking out for, just because they'll get better and better as more and more things become more virtual. But I definitely think all 3 stocks will benefit with the way that this Christmas is going to be played out this year, because this year is going to be unlike anything else that we've been through before. This is completely uncharted territory for us investors, but I really hope for some normality pretty soon. Anyways, if you enjoyed the video, make sure to hit the like button to help out the channel. I make new videos every few weeks or so make sure to subscribe as well so you get notified of them. Anyway, thanks for watching guys, and I'll see you in the next video.